Thank you, Aryaman, for joining us today on Let's Talk Business by Realty and NXT.
No, great to be here. Looking forward to the conversation, and thanks for inviting me on the platform.
So, first of all, congratulations on the Proptech, Aurum Proptech acquisition of MyreCapital. So, before we get into that, I want to know where the journey started. How did you first of all create MyreCapital, and what motivated you to venture into real estate investment?
No, absolutely. It seems like it was a long time ago, but it wasn't. 3 years ago at the start of the pandemic, I was actually in the US, so I did my education from there. I was working there. And at that point in time, I was exploring various investment models. I was working on Wall Street. So I came across this whole aspect of enabling people to invest in real estate, which wasn't the traditional HNIs or the institutional investors. They've opened up the market to a larger segment. And that's really where I started to draw inspiration. I started to find equivalent models in India. And initially, when I was doing so, it wasn't really to start a platform like that. It was to invest myself. And when I found a lack of options, that's when I realized that there's some level of opportunity. One thing led to the other. I took the Vande Bharat flight back to India.
Nice.
And we conceptualized and launched the company actually in lockdown 1. So interesting times, but that's really how it began.
And I'm sure our viewers would be also interested to know, you are an engineer, right?
Yes.
Your background is an engineer. How the change, of course, you notice the market, but being an engineer, I'm sure it must have been a different path when you went into that particular college and chose that particular field. What made you shift towards real estate completely?
Yeah, so actually, I was heavily into engineering. Computer science is something which I did far before my formal education. So even when I was in school, I used to keep dabbling with code. I did my undergraduate and master's both in engineering. But I was always very interested in the application of it. So, more than coding, I was very inquisitive about how to apply this to various systems and solutions to derive a certain output. And finance also I was quite drawn towards. I did a specialization from Wharton parallel to my engineering degree. And the natural course of things, I sort of ended up at Wall Street. So, I got a good exposure to the finance world, and the real estate sort of closely mimics or is associated to the finance world, especially from the investing side. But yeah, that's really how I transitioned from being a core engineer to being a hybrid one. So even today, I still look over a lot of tech. I'm still fascinated by tech, especially in this new AI boom. But so application really is what brought me towards real estate.
So MyreCapital was 2.5-year-old, and I would say it was your baby, right? Because it was your first entrepreneurial venture where you got into MyreCapital. So how did that start? Tell our viewers how that company made you feel that this is the need gap that you noticed in Indian real estate market that could be served by MyreCapital.
No, absolutely. So, initially when we were starting the platform, we did a lot of user surveys. So we tried to, and initially we weren't planning on starting a real estate platform. We wanted to identify an investment avenue. More so, I was looking at investments myself. And, a lot of times when you spoke to people, especially in India, they had a strong resonance with real estate.
Yeah.
It's a tangible asset. Indians inherently love rental income. So we noticed that a lot of people had a strong favoritism towards real estate as an investment avenue, yet they didn't know exactly how to invest in it. They had burnt their hands. They had a bad experience in the past. So we realized it's a very unorganized market. It's a very transactional oriented market. So if you see all your other asset classes, like let's say mutual funds, you have a fund manager who's taking accountability of ensuring that expertise is delivered in that particular segment. So I think that aspect was lacking in real estate. And that's really where we saw an opportunity. So, a lot of people, you'll often hear say that we've created a lot of our wealth through real estate. Property has gone 5x, 3x. Now, I'm not setting that as an expectation, but this is really why people like real estate, right? It's a hedge against the market. It's a tangible asset you can see.
True.
So that's really where we began our journey, trying to understand how we can democratize access, how we can enable a larger segment to participate in the Indian growth story. So, a lot of your institutional funds have increasingly deployed capital in India, right? All the way from Brookfield, Blackstone. So the premise was that as an Indian, why are we not participating in our own growth story? So, using that as our vision statement, we began this platform. And one thing led to the other, and we started democratizing real estate. But that was the fundamental premise.
No, that's quite interesting. Also, first of all, how you put it, why Indian companies not getting into this, it's quite well put. I want to know what were the initial challenges that you faced when you opened MyreCapital, because of course it was unorganized. But when it comes to finance investment, now we are seeing an influx of private creditors and AI companies coming in. But I think 3 or 4 years back, people were still skeptical when it
Yes.
comes to certain, apart from mutual funds. Of course, investment is there in terms of stocks and all, but people did not know there can be more opportunities when it comes to finance investment. So, what challenges did you initially face?
No, I mean, we faced, I would say, a lot of challenges. I'm not sure if there were some challenges we did face. But to start off with, like you said, there was a lack of awareness.
Yeah.
There was a lack of acceptability of alternative investments. We are a very conservative country. I mean, as much as we like to believe we are aggressive investors, even the penetration in the stock market is probably one of the lowest relative to other equivalent countries. So as a race, we are quite conservative. So, when alternatives like fractional ownership or P2P lending or AIFs, these are things which it takes time to sort of accept and participate in. So I think that was quite a big hurdle that we overcame, via knowledge, via content. So educating more than anything. So I think that was one of the big hurdles. The other one I think is more unique to my case, which is age. So real estate is fundamentally an industry that was operated by veterans in the space, that were operated by developers. So it was a slightly more traditional industry. So when you sort of come in as a 25-year-old and you're saying I'll buy this property of 70 crores, a lot of different skepticism is there. So I think these are the two aspects which were quite a roadblock, but with time I think we found our way, we navigated around it.
So under MyreCapital, what were the services that you were providing?
Sure. So when we started MyreCapital, it was a platform to fractionalize or democratize access to real estate.
Yeah.
So what the fundamental value proposition was, like I said, there were a lot of funds participating in these assets. They were yielding good returns. It was risk adjusted because it's a tangible asset with a tenant paying you rental, and all long-term, long contract tenants. So yeah, I mean, overall, that was the sort of motivating factor that this asset class is providing a good return, risk-adjusted return. So that's why we wanted to offer it to the larger investor base.
So tell me your vision or strategy because MyreCapital was your baby, right? And then after 2.5 years, it gets acquired by Aurum Proptech. Were you planning to get acquired within after 2.5 years, or there was a strategic move behind this acquisition?
Sure. So, I myself have worked in the VC space. And the reason I say that is, there are two ways always, the two sides of every coin. So whilst VCs come with funding, it comes with certain strings attached. So I was quite averse, at least in our kind of business, to raise venture capital, or for that matter, any capital at all. But we were trying to find a strategic partner who could help us navigate, our way from being largely in an unregulated segment to more of a regulated segment. So, that's where I felt true adoption of a alternative concept like this could come in place. So, this would enable us to scale from what today is a 2,000 crore industry to, a 50,000 crore industry. Like if you look at other countries where fractional ownership is happening, single platforms are managing $4 billion, $6 billion. And the point is you can't reach there until you don't have a regulated framework, until you don't have mass scale acceptance. So we needed a strategic partner who, more than capital, aligned on vision, aligned on execution, and gave flexibility and freedom to operate. So, we did a lot of searching. We got quite a few offers, and it wasn't for acquisition. It was actually only for an investment. But we didn't go to the traditional VCs. We wanted someone from the real estate space who understood and also the execution aspect of it. So, in time, the reason we chose Aurum was fundamentally this. Their whole ethos towards their investee companies, their whole approach really aligned with me. I mean, so Ashish is the promoter of Aurum, and he truly believes, in giving you full flexibility in achieving your goals. He enables you. So, that's really where I would say stars align, and that's when we decided to sort of take that leap of faith. It wasn't an easy decision, but today I'm kind of happy that we did make that decision. at that point in time.
And VCs who are very quite much active, especially in PropTech, and gives you a good kind of, V network or good kind of, ecosystem, even the ones they have built. So, for example, if Aurum PropTech have invested in Intergrow and then other companies, how does this ecosystem help even AurumWiseX to grow in terms of expansion, in terms of their network, in terms of their portfolio?
So in a business like this, when you're trying to create an industry.
Yeah.
So when we came into the sector, I think fractional ownership wasn't a term known by anybody. Today, fractional ownership, probably every third investor who's an HNI has come across this term. So when you're creating awareness, when you're creating a brand, when you're creating a concept and investment framework, it requires more than just capital. It requires access. It requires expertise. And that's really what we were looking for. We were looking for a strategic partner who understood the market, who understood how real estate works. So that was basically it.
So we noticed AurumWiseX has also launched YieldWiseX, right? So how different it is from AurumWiseX, and what is this platform majorly about?
About maybe 10 months ago, we realized that our focus was actually investments. Now, real estate comes in many shapes and forms, right? So one is you can go and buy the tangible asset. The other is maybe you can buy a REIT instrument. The third is you can give debt to a developer. So there are various varieties via which and instruments via which you can participate in this asset class. So what we wanted to do is segment the businesses, wherein YieldWiseX will be our portfolio for, let's say, HNIs, where the minimum investment size is 15 to 25 lakhs. We're offering fractional ownership, and we're offering high yield debt instruments, but again at a higher ticket size. We are coming up with a second platform, which is fundamentally going to be for our PMS, which we are launching next month. So that's something we're going to unveil next month. But the idea really was to offer various risk-adjusted frameworks, which align with different investor requirements. So some person might say, I'm okay with a 10%, but I want a tangible underlying asset. Someone might say, I'm okay with a little bit of credit risk, but see, I want a 16%. So giving that variety, that option to investors is really where we started diversifying our platform. So we wanted to become the one single platform for all kinds of real estate investments, private equity investments in this segment. And really, that's where our journey has sort of transitioned to since, I think, November. So November is when we launched our debt vertical, and that was the first proof of concept of supplementing fractional ownership with other investment avenues.
Nice. So fractional ownership, now we have seen a lot of players coming in, and there were a few players last year also. And now every player has a minimized starting, like how you quote 15 to 20. Some have given 25 lakhs.
Right.
Some are giving 20. But the interesting thing is the IRR they are promising to investors. It can go from your 18 to 22%. So in such market, in such competitive market where fractional ownership is now being highly appreciated, accepted by the investors, and where IRR is being promised by other players also, how you see your company in terms of standing apart from these competitors? And what is your promise to such investors when it comes to IR?
So I'll answer that question in a different manner. When this starts happening, see, if a 20% IRR was possible and there was no risk, everyone in the world would invest, right? So an arbitrage in a certain segment can't last forever. So usually this happens because of overestimation or because you need to assist your sales team, so you need to give them a high number. And this is really where the industry sort of starts taking a U-turn and starts becoming detrimental. So at this point in time, someone like SEBI stepping in is very, very pertinent to put in standards, to put in safeguards, to moderate that projection and set certain criteria and parameters. And SEBI basically did do that. So, in May this year, SEBI came in with a consultation paper, which proposes to add safeguards whilst retaining the value proposition of fractional, but add safeguards nonetheless so that investors are getting the right information. So I think that's a very important step. I think that's a very forward-looking step that will help mature the industry. Usually what happens is in a developing industry like this, if one player or two players sort of become the bad actors, it has a very detrimental impact, not only on them, but the whole industry itself. It breaks trust. And for a new industry, that trust aspect is very, very pertinent. Now, how we plan on setting ourselves apart is always through track record. So we always say that, don't look at AUM. look at track record. AUM is not, and especially in real estate, because real estate is not like equities, where year on year you're going to see something happen. Real estate is slightly more patient asset class, right? It takes a little bit of time for assets to appreciate. So more than looking at how much has been accumulated, people should, at least in real estate, put emphasis on what has happened in the past. I mean, have your returns been on time? What is the returns you've given to someone versus what you projected, right? So if someone's projecting 8.5 and giving 8.5, in my opinion, that's better than someone who's projecting 10 and then giving 7. Right? So those kinds of things we constantly kept emphasizing, and even today we do. We advocate for people to emphasize on track record.
That's very interesting, because few players obviously boast about AUM, right? And here you are saying that don't look at the AUM, look at the track record. It's quite interesting and a different take on that. But when it comes to vision and values, because now technology has give a great initiative for these fractional ownership companies also, right? Because there's transparency, investors can easily track, as you mentioned, they can easily even see what's going on with what asset and everything. So how are you utilizing technology when it comes to AurumWiseX?
Sure. So technology is very close to my heart. From day one, we've had a very lean team. So actually, I'll take a step back. So we were the only fractional ownership platform in the country that was bootstrapped. This became a heavily VC-funded business. But we decided to take the other approach, which was unit economics, which was profitability, but not compromising growth. Now, the way we were able to achieve this was through technology. We automated our operations. Even to date, our entire operations is managed by one person, because that person is supported through technology. Now, that person's job is not to do operations; it's to find use cases that we haven't addressed, and then work with the tech team to implement technology that sort of addresses that aspect. So, all parts of our company have been built like this, which are tech supported, tech led, innovation led, and that's enabled us to maintain a lean team. So today, of the alternative space, we have the smallest team by number of people, whilst I advocate against AUM, one of the larger AUMs in the segment. So, that's how we've used technology in the past. Something cool that we are doing now is, whilst there is an AI hype, but we are using it for a lot of internal purposes. Like, for instance, sales team, not only in our business, in any business for that matter, have a perpetual problem, right? Yeah, I'm getting 500 leads. Who should I call? Who should I not call? So every business has certain leading metrics. Like for us, NRI is a good lead. Someone who maybe is working as a high salaried professional is a good lead. So how do you extract that data? How do you collect that data? How do you utilize it? So, that's what we're using AI for. We've started doing ranking of leads. We'll be launching, our AI platform shortly. We're actually coming up with a name for it. But that's fundamentally to support our sales team, to give them that intelligence as to who to call now, who not to call. And the second side is obviously towards asset selection. So we get a lot of opportunities. A lot of them can't be evaluated in real time by, our team. We don't want to build a acquisition team of 30 people. That's not the idea. We want to use technology to shortlist out of 100 opportunities, the 10 that should be evaluated, and then manually evaluate those 10. So this is how we're using tech, not to replace functions, not to disrupt or remove people from the equation. We're using it to enable people to run things more optimally.
So a lot of people generate leads through Facebook, through Google. How do you utilize such leads? Because a lot of developers, a lot of everyone in real estate are utilizing this to get leads, but there are problems when it comes to getting the serious buyers, right? There are problems when it comes to leads being double or being not accurate. So are you also facing such problems, or you are going to build this filter in the particular AI which you are planning to launch?
So actually, this is something we had addressed from the very start. So I'm still very heavily into marketing. And the way we address this is actually not with AI, but with machine learning. So what we do is we collect more than 500 touch points on any user in real time. So all the way from the time you fill the first form, like you probably put your email, phone. Now, usually people IP address is also exposed. So I know what city they're in. I know which country they're in. Through the phone number, country code, I know if you're NRI or domestic. Now, when you come to my website, have you spent 2 minutes on the homepage? Did you spend 10 seconds on the homepage? How many times have you logged in? How many emails have you opened? So all these micro data is what we collect. And what I truly believe is that, when you're asking a user to fill in information, that information can be inaccurate, but usually behavior is the best indicator of intent. right? Now, if you're spending time on my emails, you can say you're interested or not, but I know you're interested.
True.
So we kept collecting this micro data and we kept pushing this micro data as signals to both Facebook, Google, the various ad platforms that we use, and whitelisting and blacklisting certain funnels. So we set up an automated process by which this keeps happening, and we keep refining. So the more users that come, the better our data sets become, and the better the lead gen becomes. So today we're sitting at a very, very attractive qualified rate. And again, the parameter for me always for marketing has not been number of leads. It's not been cost per lead. It's always been qualified ratio of the number of leads coming in and the cost per qualified lead. Right? So that's what we've been optimizing for.
So how do you define the qualified lead? Because there be so many leads coming in, right? As you mentioned, there are customers who might fill the wrong information. There are customers who might, I don't know, like when I get certain kind of ads and I've tested this, I would put, even if I put xyz@gmail.com, it can get submitted.
Right.
So how do you come out with the qualified leads?
Sure. So what happens is that the qualified gets, so that status gets allocated to an individual lead over time. So we do various kinds of testing with the user, like we send them a bunch of emails. Now, none of those emails have been used, and of course, he's not qualified. We do certain OTP processes. So again, if the OTP is not validated, not qualified. So there are a certain set of criteria. Only once met does the lead get categorized as qualified. Now that also involves a certain level of interest. So we've quantifiably made a framework which defines interest, which means that you should have opened X number of emails. You should have spent maybe 15 minutes on a deck that I've sent you. So we collect all this micro data via which we categorize intent.
That's quite interesting, because all these while we have seen leads getting generated for developers. We see their ads, we've seen Insta stories and everything to submit forms. But it's very interesting to see that fractional ownership where the companies are also, because I'm talking to other companies and they're saying they're heavily using Facebook, Google ads, other platforms to generate leads. So when we talk about such leads, are you saying investors are actually coming through such platforms for the fractional ownership?
Absolutely. So today we do about 50-60% of our sales purely B2C, which means through ad platforms, through PR, through organic, and 40% roughly is through our partner network. So contrary to my expectation as well, people do come from Facebook ads. They do invest 1 crore plus, 50 lakhs plus, and the kind of profiles that you get, unimaginable.
Nice.